Hey everyone, welcome back. Today I just passed my phase two FTMO challenge. It was $100,000 phase two FTMO challenge that I just passed today. And it took me about, I would say, one, two, about 4 weeks, maybe 17 trading days. I'd have to double check. Um, I see a lot of growth and I'm gonna explain how I was able to pass this FTMO challenge. Main things that I'm going to focus on in this video is how I focus on passing, key shifts, risk discipline, entry model, psychology, biggest mistake avoided, and then I'll end it with like scaling, withdrawing, and consistency. So first, let's start with focusing on how I passed. So how I passed is I think the compound effect is an important factor in like, how your habits, the way that you live. Are you eating healthy? I'm personally eating healthy. I think it starts with your habits because if your mind isn't right, then your consistency and your discipline in the markets, they reflect your habits that you have in life. Like if you're, I personally, my goal is to read every day. I read a lot every day. And I'm starting to read more every day. And I try not to go a day without reading. I think that that'll mess up with my flow. Vice versa, if I mess up something in real life, I think that, it's going to reflect into my trading habits. I might um overwork myself in the markets and revenge trade if I lose just because I wasn't disciplined in real life. That's just how I operate, and that's also a psychological thing that I read about. And so focus on how I passed. I also didn't revenge trade the week that I was not profitable. So I'm gonna share my screen to give you guys a better understanding of the mindset or the mentality that I had during the process. If we look back at the first week, I think I started on the 17th, so this didn't really count, but it kind of did. The following week, though, you can see that I only had red days, so I didn't let this get to my head. Um, as for the following week, though, I ended up replenishing my L's, and I I'm pretty sure I got back in profit if you were to add these all up to cover my losses. And then if we look at, how this month went, because that was October, we're now in November. Today's the 12th. You can see, my wins started to grow further or more than my losses, except for this day right here. This was a bad day. This was last Friday. But some days, as you can see, if you guys looked at my last video where I passed the phase one account, um, with FTMO, you'll see I had like a $9,000 day. So that's typically in the distribution phase. So I will try to address that to where you can understand where I'm coming from, where you want to make sure that or this is not financial advice in any way, but from my experience, I'm just sharing from my experience. So I'll give you guys ideas on how I go about, trading the market. So what else? I mean, before I get into that, I want to show you guys as well. On this phase two account, the protocol was for me to take the $100,000 account to 105,000, which means grow the account's equity by 5% without losing 10,000. So without having a daily loss of 5%, which is 5,000 for the day on the account. Also without having a lifetime uh drawdown of 10,000. So can't exceed a drawdown of $10,000 on the $100,000 account, or else it would have gotten taken away. So My win rate is 40%. Number of trades I took was 55. That's I would say that that is definitely more not exactly 15. That's about okay, so this is ballpark in the area of the amount of trades that I would take on a weekly basis. Um Definitely not as many trades that you would see on on my personal journal. I usually seems like I take more on my personal, but mainly for the reason of the fact that when you're trading on FTMO, I'm not sure if I'm doing it incorrectly or what the case is, but I would try to add more positions. And then the thing is, FTMO, it'll use the stop loss, the same stop loss that you created for your new order. It'll just merge your previous order that's already open, and the stop loss starts being shared. So, that's one of the main reasons why I don't, excuse me, I just don't I don't know, I guess I just don't place multiple trades into the same opportunity like I do with or manage it the same way like I do my live account. So with that being said, that is pretty much my psychology there. I yeah. What is it though? Expectancy. I don't know if you guys find any importance in that. That's perfect. Um, all right, let's see what's next. So what's next is gonna be key shifts. So key shifts for me in this process would be, I mean, I would say holding on to trades longer than others. Not even just others, but also myself. Like, I find this to be a very you versus you space in the trading space because there's been times in the past for years where I would enter the market and exit immediately, but nowadays I have more emotional control, mainly because of my risk. So I've also risk less than I used to. I risk less than 1% because I just I'm not sure exactly what's gonna happen in the markets, and I just believe that nobody in, who's trading, no matter who you are, should over leverage um and throw too many lots in because you just don't necessarily know what's truly gonna happen. No matter how high your win rate is, it really doesn't make sense to me personally to have, huge lot sizes. And I found a big difference in lowering my lot size that helped me, um, which is typically going to be less than 1%. And many people have bad things to say about people who, you know, um, are risking, 1%, 2% or less, but that's not my problem. Anyways, risk, just so yeah, I mean, the way that I risk is consistent and it is I would say less than what, most people would risk. Um Entry model, I'd say I think what might help you guys out would be staying on like higher time frames. So like let's take a look at the daily time frame. Um let's see if I can find one of the trades that I took this week. I know for sure a gold trade and I think also a NASDAQ trade. Um, I don't know. I mean, NASDAQ it just this week, and I do use a lot of alerts too. I like to board up my chart panel with a lot of alerts for some reason, but it just helps me also understand like what session is, what's going on each session as well to see if there's any players, big players active in the market. Also kind of lets me know if I should start looking for an opportunity or not. Um, So now if we start looking at the daily time frame, we're gonna see that the daily is clearly bullish. Not only is it clearly bullish, but if we indicate the low and the high, this is the low, this is the high of the daily. We also got a direct pullback and we've came into a good amount of areas of interest. So if we start looking at this part right here, this price point right here definitely seems important. And what happens when price hits this key level? You can see that there was a wick created, but if we zoom into the 1 hour time frame, you can see that not only was it a wick before on the daily, but you can see that you know, market movers or whoever's pushing the market at first, they were creating lower highs and lower lows, but then they started, moving price up and creating higher highs. So what I did was I started identifying the swings that are happening, and then I was able to capitalize on the move, the that was trending up. Then also, I found certain moves as well that were pretty similar on S&P 500 as well as gold. And, that's when you start scaling down to smaller time frames. So, 15 minute, 5 minute time frame to start getting entry points to capitalize on the move. And that's pretty much what I've been doing. So that's been helpful. And it's helpful to, have your alerts set and stuff like that so that you can be aware of these events that are happening in the market so that you can start capitalizing on these moves so that they don't just move off without you. And that's pretty much how I've been trading. So psychology, I would say I think I didn't speak too much about this, but um so psychology, I mean psychology is a very important thing to work on, and I've been working on it for about 6 years, according to the way that I trade. So the psychology, the mentality that I have when placing trades, anticipating trades would be I don't for the first thing that I think about is how much am I going to lose if this trade ends up hitting my stop loss. So if I lose this trade, how much am I going to, you know, how much of my equity is going to be gone? So I somewhat absorb the feeling, the emotion prior to me even entering the trade. I accept the risk, almost like a casino accepts risk when they have people play on their slot machines and stuff like that. They understand the business model and they already have calculated the, they understand the whole profit and loss statements because they have a business model and with their, I want to say win rate, um, on a high time frame scale, they can see profit long term based on how their business model is structured. So just by reading Mark Douglas's books like The Disciplined Trader or Trading in the Zone, it gives you an idea of how you should probably think in order to somewhat be one of those type of people who are good at losing. Um, Similar to probably playing blackjack, but definitely, it's definitely helpful to train your mind to think differently about risk and accept risk because most people are afraid, especially of numbers. People see numbers or drawdown on their screen or see a lot of red on their screen. They might panic and start closing out. But mainly, I've also experienced that myself, obviously, for a long time. And it's been the case for me when I just, would I would risk way more than I should. I wouldn't think about the risk. I would just throw as many lots as I can on my live account. Clearly you wouldn't really want to do that on a prop firm account or, if you start doing that, you're most likely going to just lose the account without a question since there's so many regulations or, barriers that you have to stay within. But yeah, that's my psychology is just, proper risk management, paying attention to where price is at certain key levels, looking at previous data to see how price reacts once it hits that uh area, you know, looking at what the high time frame is indicating to know whether you should trade in that direction or not. Sometimes I go against that trading plan and I would, start trading maybe in the opposite way from external to internal instead of internal to external. And I covered external and internal in my previous videos. So if you haven't watched those videos, I would suggest it. And biggest mistakes avoided would be, I would say, revenge trading because I would say prior to me trading the way I am now, I used to revenge trade, but I've been more accepting or I've been more welcoming to losing trades than I was before, if that makes sense. And then lastly, scaling. So to scale, I would with this $100,000 account, I would just take profits. It's gonna be 80/20 by the way, so I take 80% of the profits I make on the account. They keep 20%. And then whatever profit I make on the account, I would take most of it, or some of it, and then invest it into more prop from accounts to start scaling into, instead of six figures, start managing multi-million dollars. Withdrawals, yeah. I mean, withdrawals, I don't mind doing monthly withdrawals. If they allow me to do monthly withdrawals, I would rather do mo monthly withdrawals than weekly. And then consistency, the reason why I do my monthly withdrawals is because um I just don't really see myself always being profitable every week. I mean, it is possible to be profitable every week. It just in my experience and based on my journal, I just haven't been consistently profitable every single week. So I just think that it might make more sense for me to just go monthly. I just don't personally mind. I'm not in a rush to get rich quick anyways, and that's just me. So, consistency, nothing really to say about consistency. It's either you're consistent or you're not. And if I don't see a setup, I'm not gonna trade it. If I don't see proper R2R, right, risk to reward, then I'm just not even gonna consider the idea. I'm not gonna entertain the idea if I don't see a good R2R. So usually I would go for at least a 1 to 3 risk to reward opportunity. And if I don't see at least a 1 to 3 risk to reward opportunity, then I'm not necessarily gonna entertain the idea. Not all the time, just most of the time. So that is it to conclude on how this journey is going. Again, I'm gonna drop my Discord down below. It's gonna be in the description if you guys want to join, to also see what type of, trades I'm taking on a weekly basis. Feel free to join. It's a free community. It's called the Trading Floor. I also have an education hub section in there as well. So you can learn things that you probably aren't really familiar with as well. And yeah, that's pretty much it. If you haven't already, like, comment, subscribe. And I hope to see you guys next week as well. Thank you for watching.